Welcome to the Bucket Plan on Demand, a podcast for financial advisors based on the best-selling book and process that simplifies financial planning. Hear from skilled industry professionals and special guests each episode that will help perfect your approach with clients and your results.
So just to kind of land the plane on design, organizing everything, putting everything into a family estate organizer for the surviving spouse or the kids or beneficiaries to have everything in one place and organized and everybody to be on the same page. Doing the volatility tolerance analysis based on the bucket plan and how much is in the now, soon, and later. Scoring the soon bucket, the money you're going to use for income or withdrawals, or you want to have invested more conservatively, different and separately from the later bucket in that volatility tolerance analysis, while we utilize the pyramid of risk to not just educate, but also understand past investment and insurance experiences that client has had with those things. And then ultimately being able to go to the engineering phase, right? Between step 2 and step 3. And so let's go ahead and start talking about step 3. And Bryan, maybe you can, let's say the engineering is done, right? We're all the way through discover, we're through design, we're now ready to deliver the plan, the blueprint finalized, right? In the delivery phase of the process.
Yeah, there's no doubt about it. But Jason, really to your point here, it's we come back in, we reset after that design appointment, and we're coming back in with fresh minds because we can't do this all at once. It's a data overload. So we're coming back in, we're meeting virtually, we're meeting in the office, whatever it may be. And at that time, we have built out that family estate organizer for you, right? I'm showing the clients their exact family estate organizer after we did some catch up in the beginning of the meeting, right? Making sure whatever's on their mind gets addressed. But I'm going, hey, look at what we've done for you. We've built out this family estate organizer, and we've made it turnkey for you. From the bank accounts, the investment accounts, Social Security, health care, taxes, just to name a few things. And we put them in there, and they're in these nice sleeves where you can remove them and put in the new ones as the statement comes up. I joke with people, I go, I expect you to update this every month. And I just stop as a joke, right? Because that's not reality, right? I said, in all reality, we need you to update this once a year, right? And if there's problems with it, you let us know, but update it once a year. What my wife and I do is every January, right after the first of the year, we actually go through our family estate organizer. We sit down, we print out all the statements, and we make sure we're up to date. Which, you work with us, we'll be able to help update your asset sheet. I'm just doing it on my own because, as you can imagine, being the financial planner of the family. So what we end up doing after we deliver that family estate organizer, we start recapping what we went through last time. And we start summarizing. We're giving people, whether it be digitally, a full-blown financial plan, or physically that full-blown financial plan. So let's pretend we're in the office, Jason. I'm going, hey, we just gave you a family estate organizer. Now here, Jason, everything we're going to go over today is going to be in this binding of your financial plan. So I'm handing people that binding of the financial plan. I'm about to go over it. I'm going to go, guess what? You have a notepad here, take notes, but every little detail you're seeing is going to be in that financial plan that you're going to be able to digest after that meeting. So they're getting the full-blown plan, but what I start that meeting with is, we talked about, Dave, in that first phase of the discovery, the concerns and the priorities, right? I'm rehashing with them. What were their number one concerns and priorities? Said, when we met the first time, this is what you shared with us is in your minds and in your hearts and what you care about the most. And let's just say an example was like tax-efficient distribution planning. Well, Jason, what we've done for you is within your financial plan, you're going to retire soon, and you're worried about the taxes. And we have these different funnels of money. You have some pre-tax money, some post-tax money, and some tax advantage money. We've integrated all those dollars together and have solved this to make sure you have a tax-efficient plan. We'll talk more about it today. So what we're really doing is retying why they were originally here. There was a pain point of why you came and saw us. Something had usually came up in life, or retirement's ahead of us, or I need an addition on the house. How do I fund it, right? All those kind of things is the pain point of why they're here. So I'm diving into that. I'm just recapturing is like, how did they score on the VTA? What was their income that they needed? So that's what we're working through at the beginning of that. And then, Dave, where do we transfer from there?
Yeah, well, I mean, Bryan, I think big picture in this deliver meeting, like I always break it down into there's probably 3 or 4 main things we're trying to accomplish. To your point, you mentioned earlier, the first thing is that we want to show them how we could eliminate the things that are concerning to them. Things like running out of money in retirement or a large stock market drop early on in retirement. So it's about eliminating concerns. It's about addressing the things that they shared are their priorities. Maybe that's securing long-term care funding or a plan. Maybe that's legacy planning for the children or the grandchildren. Maybe that is share kind of this copy of a book, An Approach to Die with Zero, where they want to go maximize their money while they're alive and enjoy retirement in the most meaningful ways. So it's eliminating concerns, addressing priorities, and being able to validate and show the clients how we can help them achieve their goals and objectives. All the things that they shared with us in that Discover meeting. Now, what we then do is walk through all the elements of the work we've done together. We walk through their cash flow assessment. If they're younger, they're still a ways out from retirement. It's probably an accumulation and savings plan so that one day they can ultimately retire. And we want to show them the maximum tax efficiency along the way while they're earning money, earning a paycheck, running their business, whatever they're doing to accumulate wealth. If they're approaching retirement or in retirement, it's the most appropriate cash flow plan to secure the reliable income stream that they need in and through retirement. And that could be broken into different phases. I always share with my clients that there's really 3 phases of retirement. There's your go years, your slow go years, and your no-go years. And so maybe in their bucket plan, they want to be able to spend more money in their go years when they have the health and the wealth, right? Tied it into your podcast. You like that?
I like that.
To be able to go do more things in life, travel, and they've got the energy. And then they might get into their slow go years. They need a little bit less cash flow. And then ultimately their no-go years. And so we help map out what that cash flow looks like. To be able to support that cash flow, we then validate how much money we need in each bucket. And again, now we've crunched all the numbers of things like Social Security optimization. Should we delay till age 70? Should we take it at 62? Should we do a spread strategy where one spouse takes it early and the other spouse delays it? How does that impact their taxes? What accounts should they draw their retirement income from? Should it be all pre-tax? Should it be all post-tax and keep their taxes down while we strategically do Roth conversions for maybe legacy planning? There's so many different things to talk through to be able to validate their bucket plan. And then what we do is we show them an asset transition illustration. Because a lot of times when I show clients the bucket plan, they're like, yep, you nailed it. This is exactly what we want, but we have no idea how to get the money over to you and to implement this. And so we show them on the left side of the page, here's all the accounts that you have today. On the right side of the page, here's where they need to be to optimize and implement your bucket plan. And in some cases, we could make that move immediately. Whereas in other cases, it might be a period of time before we could make that move. Maybe they're still working and they don't have access to roll over their 401k yet. And we need to build a timeline of implementation as well. Maybe they've got a bunch of concentrated stock that we can't just go sell all in 1 year or we would blow up their tax return. We need to build a very strategic tax optimized distribution or disposition plan around how we're going to sell that stock. So that asset transition illustration helps lay out the roadmap of how they're going to get from where they are now to how they're going to be able to execute their fully optimized bucket plan. Then we go through all of the costs and fees associated, because I know at JL Smith, just like at Alison Wealth, we are not a nonprofit. We do charge for the implementation, and we want it to be very transparent and upfront with what the costs, the fees, and the expenses are going to be. Because one of the things that drives me nuts about the financial services industry is that in many cases, there's a lack of transparency of how much clients are actually paying for their investments or for their advisor. And so we believe in having everything documented so that clients can actually see down to the dollar what they're paying for their investments and their advisor and their plan, and there's a level of accountability there. And then from there, we have all of the resources like the different illustrations or proposals, the financial modeling, things like Social Security optimization, kind of all that, Jason, what you mentioned, all the engineering stuff, so that if clients want to see how this kind of maps out, they can be able to do so. And that kind of gives the client the total peace of mind of saying, all right, this plan is going to eliminate my concerns. It's going to address my priorities. It's going to help my family achieve our goals and objectives in a very efficient and meaningful way. We understand how our assets are positioned. We understand the investments that we own. We understand the fees and expenses that we're paying, and they have the total confidence to be able to move forward into implementation and have one less thing to worry about in life, knowing that they have a team of fiduciaries like what we provide to our clients to help continue to guide them along the way as their life changes, their needs change, their goals and objectives change. And quite frankly, the stock market changes, the economy changes, public policy, taxes, all of these things are ever changing. And our team of advisors is there to stay up to date on these things so that our clients can go enjoy the things that actually bring them meaning and fulfillment in life.
I want to reiterate something you guys both talked about briefly, and it's just so crucial, right? And I think it's a key differentiator for both Alison Wealth and JL Smith and our holistic wealth management approach that we follow and subscribe to in the Bucket Plan. Obviously, when you work with an investment professional, they're going to take care of your investments. Many of them will also look after your protection planning, your insurance, right? That is incorporated as part of the plan. Whether they bring in the attorney or whether they have more experience in regards to legacy and estate planning, sometimes that gets handled by investment professionals, sometimes it doesn't. But the tax planning and management component is so crucial when it comes to what holistic wealth management really is and the ultimate outcome of the plan. And both of you guys talked about this, and you referenced the funnels. And I think the funnels are just so crucial. So I want to just spend a minute or two on those because, as Bryan described, we use funnels to fill the buckets in the accumulation phase. And there's 3 funnels. And when we say funnels, it's how you can basically stamp your money of how it will be taxed in the future. It's choices you make in the accumulation phase as to whether that money is going to be pre-tax, like your traditional 401k, IRA, thrift saving plan, 403b, a lot of those the kind of things that people are familiar with. You are choosing to not pay any tax. It's pre-tax, and then it all accumulates. But ultimately, when you pull it out, it's taxed as ordinary income. That's the first of the 3 funnels. The second is post-tax. Post-tax, you're choosing to pay the tax. You're not going to put it in that pre-tax status like what we just described. But ultimately, as it earns year after year, you're going to get forms from the institutions that's going to cause you to pay tax as you go each year, right? You got to pay tax on the growth of those investments throughout. And then the third and final is the tax advantaged, or some people call it tax-free. And so it's Roth money, it's HSAs, there's cash value within life insurance that can fall into that category. So the decisions you make in accumulation of where you deposit your money almost and funnel it through to fill your buckets. But then when you go into distribution, Now it's what type of tax you're going to pay throughout retirement, and then ultimately what kind of tax your spouse, for surviving spouse when you pass away, or your kids and beneficiaries are going to pay. And so there's so much art and science to blending out income when you get into that distribution phase. And I just feel like it's important to reiterate how important that really is, both in the accumulation phase of using the buckets to fill the funnels to fill the buckets, as well as in the distribution phase of blending out income to take advantage of what the government allows us to do, pay legally, pay the least amount of taxes that we possibly can by making good decisions.
Yeah, I think tax efficiency is crucial. And I'm just going to give you a general overview so people hear this is, usually it's tens of thousands, if not hundreds of thousands of dollars over our lifetime when we put a tax plan into place. I'm not kidding. And we're able to actually put this in dollar amounts and show the individual saying, hey, instead of you just doing the traditional strategy, here's the solution that we've talked to and here's how to implement it. And we live till 90, it's $150,000 less in taxes. It's $200,000 less in taxes. It's astronomical numbers.
And that's for a normal kind of person, right? Like not a real high net worth or ultra high net worth. You start getting into there, you're talking about millions of dollars.
Yeah, I mean,
yeah, we have clients we're saving 100, 200, 300, 400,000 a year. And imagine what that adds up to over 10, 20, 30, 40 years. I mean, the reality of it is, and Jason, you mentioned it, taxes will be pretty much everybody's single largest expense throughout their lifetime. It just will. It pales in comparison to the cost of healthcare in the United States. It pales in comparison to the cost of your mortgage or your groceries or your car. Lifetime taxes are something that we all need to focus on. And when you think about taxes, if you think about those funnels that you mentioned, Jason, there's the three funnels, the pre-tax, the post-tax, and the tax favored. For any money that you have in the first two funnels, the pre-tax or the post-tax, hopefully the value of those investments in those funnels are growing over time, which means that your tax liability is growing over time also. It's not just growing because you're adding more money to it, it's growing because that money's invested in the stock market, and the stock market is growing. If we look at the stock market over the last 12 months, it was up, what, 15 to 20%? That means your tax liability just increased 15 to 20% on that money as well. So it's not about what you make, it's about what you keep. And that's so much of what step 4 is. That's really our dedicated phase, where we are every single year throughout the year proactively looking at your income, your cash flow, your investments, your savings, your taxes, to figure out if we can do legal strategies to help minimize what maybe not just the tax liability each and every year will be, but what your lifetime tax liability would be. And so there's just so much value to be really paying keen attention to what the net after-tax impact is of the wealth that you're building.
Well, that's a great way to land the plane. I think we've done a great job covering design and deliver. And so in the next episode, which will wrap up this series on the bucket plan, holistic wealth management process, we're going to talk about the dedicated phase, which is really onboarding the client based on all the work that we've done in discover, design, and deliver, and then ultimately the management, right? The maintenance of the house, like we talked about, ongoing after that.
Getting the plan implemented.
Well, Jason, I just want to share, don't forget, subscribe to our channel, subscribe to our YouTube page, download these podcasts, and don't forget the Bucket Plan book. Go ahead and reach out to our office and we'll send you a complimentary copy of this book where you can actually read a true story of Jason taking Jerry and Irene through the bucket plan process, everything we've described in this podcast so far. So, fellas, it's been fun being here with you today.
Appreciate it. Thanks, Dave.
Thanks for tuning in to the Bucket Plan on Demand, brought to you by C2P, an organization whose purpose is to educate, train, grow, and support holistic financial advisors so families can achieve true prosperity. Subscribe today for the latest episodes and insights. Visit c2penterprises.com to learn how we can help support and enhance your advisory business. At the time of delivery and any subsequent publishing, information was deemed reliable but is subject to change by the time of listening or viewing. The contents of this piece include options and projections of C2P, are subject to change, and are for informational purposes only. The information provided in this presentation is not intended to be individual investment, tax, or legal advice.